Presenter, VO. Imagine spending 20 years paying your mortgage. You've done everything right. You've kept up with every repayment. You've maintained your home. And then one day, quietly, without warning, your bank decides your property is no longer worth lending against. No letter, no phone call, no explanation. Your home has been blacklisted. And here's the terrifying part. This isn't a hypothetical. It is happening right now across the United Kingdom to thousands of ordinary homeowners, and the banks don't want you to talk about it. Channel logo animation, upbeat yet serious music. Presenter. Welcome back to UK Economic Report, the channel that cuts through the noise and tells you what the headlines are missing. I'm your name, and today we're diving deep into one of the most urgent and underreported stories in the British property market right now. UK banks are quietly and systematically blacklisting entire categories of homes. We're going to tell you exactly which homes are affected, why this is happening, and most critically, how you can check if yours is one of them. Stay with us. This could be the most important video you watch this year. Graphic, map of UK with risk zones highlighted. Presenter. Let's start with the basics. What does it mean when a bank blacklists a home? It doesn't necessarily mean your bank will repossess your property tomorrow. What it means is this. The bank will no longer lend against it. They won't approve a new mortgage on it. They won't let someone remortgage it. And crucially, if you try to sell, your buyer may find they simply cannot get finance. Your home, for all practical purposes, becomes unsellable on the open market. And the category of homes being flagged is growing faster than most people realize. B-roll, January to 2026, flooding footage across England. Presenter. The single biggest driver of this silent blacklisting is flood risk, and it has accelerated dramatically in 2026. This January was the wettest on record for large parts of England. Insurers, regulators, and now banks are waking up to a new reality. Climate change is no longer a future problem. It is a present financial crisis. Here are the numbers that should alarm you. According to the government's own environment agency, there are currently 6.3 million properties in England sitting in areas at risk of flooding, from rivers, coastal surges, and surface water. That is 1 in 5 homes in this country, and it gets worse. The insurer Aviva has found that roughly 11% of new homes built between 2022 and 2024 sit in areas facing medium to high flood risk, up from 8% in the previous decade. We are still building on floodplains, and banks are now refusing to finance the consequences. Graphic, bank logos, Lloyds, NatWest, Nationwide, HSBC. Presenter. Let's name names, because the major high street lenders are all involved and they are tightening their criteria fast. Nationwide Building Society was the first major lender to publicly confirm it had stopped making loans to some homes at risk of flooding back in 2024. At the time, many in the industry dismissed it as an outlier. They were wrong. Nationwide was simply the first to say out loud what others were already doing quietly. Lloyds Banking Group, Britain's single biggest mortgage provider, now openly conducts physical inspections of properties exposed to elevated flood risk. Their policy is blunt. If a property is deemed unsuitable collateral, they will not provide a mortgage. Full stop. Consider what that means. Lloyds has already declared that 1 in 6 properties on its books is at risk of flooding. That is a staggering proportion of the UK housing stock. NatWest has gone further with its data. The bank says that 3.4% of its assessed home loans are already at high flood risk, with a further 1.3% at very high risk. NatWest now limits loans on flats, new builds, and buy-to-let properties in those categories, and says it continuously reviews its policies as new flood risk data comes in. HSBC is expected to publish its full 2025 climate risk report imminently. The direction of travel is clear. Graphic, homeowner trapped between falling house value and bank rejection.